I want to share with you my strategy on how to get rich in the stock market and how people do get rich in the stock market. And if you're looking for some sort of magical system, I want to honor your time. I have no magical system. I have just very basic, very tried and true methods that need to be done. And I get it. As soon as I start to say this stuff, you may be thinking, what? But the thing is, most people just don't do what I'm about to talk about. And I mean, I guess if you don't believe me, just run a little Google search and you'll see all sorts of headlines out there about people barely having any money in retirement, people not having any savings, and it can get really, really nasty out there. But like I said, this is what rich people do. This is how wealth is built, using this strategy. And it's a basic strategy. Now, I do put a little twist on it because I realize most people aren't looking to trade, aren't looking to, whether that be swing trading or day trading. Most people are just looking to invest. So this video still pertains to those of you, but like I said, what I do is I like to do and approach all this in this way. Now this is, I mean, I'm a little past this point, but this is assuming that you're just getting started and you want a way to get involved in the stock market so that you can start to build wealth and, grow your money over time. So this is you right here. And so this is Sue, and she wants to, start to make some money in the market. Well, the first thing she needs to do is right here, okay? This is step one, and I get it. A lot of people aren't gonna like seeing that. What? I just can't put 50 bucks in the stock market and walk away a millionaire? I wanna go Lambo shopping next week. No, that's not how it works, okay? Sorry. You're not gonna be sipping Cristal from your yacht after you arrive on your private jet because you have 100 bucks and you throw it in the stock market or the Bitcoin market or whatever. I get it, that's an easy sales pitch. That's a great marketing pitch. That's just not the reality of the situation. So you're gonna need a job. Now, this is what I would recommend everybody to do, especially, like I said, if you want to do trading. I know the temptation is to do this. So you make a job, and let's just say, for example's sake, you have $500 that you're ready to use. So, I mean, after your job, you decide, I want to put $500 towards growing it. I want to make this $500 every single month or, whatever time frame that is, maybe every 3 months. But I want to put it in ways that'll actually grow. Whereas give it to Netflix and I mean, I don't get any others, that's not going to grow your money. But let's say you have $500. The big temptation is, and what I want to really discourage you from doing is saying, you know what? I want to be a trader, right? So over here, you want to trade. So there's just say, yep, so $500, 100% of that goes to trade. I don't like that, and here's why I don't like that. Trading is risky. Trading is difficult. Now, the good thing about that is, what I just talked about, it's high risk. High risk to be using your money for trading. I have no problem saying that. That's the honesty behind it. That's just a fact of the matter. But if you do it right, if you get knowledge, if you get a strategy, and you approach all this in the right way, there is going to be high reward, all right? There's going to be opportunity out there to do very, very well for yourself. But you still have to factor in, you still have to acknowledge the fact of this part right here, that it is high risk. I mean, you could lose everything. It could go kaput. But I would still argue that you still want to be involved in it. I mean, because there is high reward. And now when I say you want to get involved in it, this is under the assumption that you want to approach it in a logical and a methodical way. You want to learn, you want to invest in yourself, and you want to build strategies and all that. So that's what I'm assuming, but it is still high risk. So like I said, you got to avoid this temptation, and you got to avoid it. And instead, like I said, this is what I've done, and this is what I still do. But it's a little more complicated now since I have real estate investments and just other stuff. But this is at the core, this is still what I do. Instead of just taking 100% of whatever money you have from your job and throwing it into one avenue, diversify. So in this situation, and this number's up to you, take 50% of the 500 and use that for trading. That way only 50% of that money is in a high risk category. So, all right, Clay, well, that still means there's 50% left. What else would I then be doing? Well, with the other 50%, I want you to invest it, okay? And this is what most people are doing. Now, if you're someone that says, I have no interest at all in trading, well, then at this point, all right, 100% of that would then go into investing. Now, what's the difference with investing versus trading? Well, investing is low risk. Sorry, not low risk, high reward. That would be pretty cool. But low reward. Now, what do I mean by low reward? What do I mean by low risk? The stock market, I mean, it's a mathematical fact. You just look through history, you run some numbers, especially when you start to factor in compounding interest, which is the greatest thing ever. The stock market turns people into millionaires. There's no doubt about it. Wait, it turns people into millionaires? Why are you saying that's low reward then? Because it takes decades upon decades upon decades. That is why. Yes, over decades, the market goes up. That's been the historical trend since basically the beginning. Hence the low risk part. Historically speaking, the markets go up and up and up, and you can open up a can of worms in terms of why that's the case. Well, it's manipulated. I'm not going to go there. My point is, that is why I consider it low risk, because over extensive periods of time, decades upon decades, in other words, none of this is happening overnight, but over decades, it's trending up. And I'm not asking you to take my word for it. Just run a Google search for historical performance of the stock market and find a nice little line chart, and you'll see that line chart goes up and up and up over time. Now, there's definitely some things where it goes like that, but overall, the trend is up, hence the low risk. And then the low reward is, well, yeah, it'll turn you into a millionaire, but it's not exactly happening fast. Whereas in trading, you can generate some very nice returns for yourself in very short amounts of time relative to decades and decades. So I don't want this to come across like, hey, start trading and then next week you're going to be making these. That's not what I'm saying. I'm just saying compared to decades upon decades, trading can produce some very nice returns. But again, we have high risk. So that's where you want to diversify this cash into a couple different areas. Sure, put some more in a high risker area, such as trading. But you also want to start to get some good, firm, passive cash flow that comes in by investing it. Now, I should also note this assumes you're investing it in a good, strategic, a very wise way. So that's the other assumption right there. I mean, if you're just out there saying, let me find a dividend stock that pays 40% dividends, that's what I'm investing in. That's not a good strategy. If you don't know why it's not a good strategy, in fact, I'll put a link below to a video that's all about high yield dividend investing, which is actually a terrible way to go about it, and I'll explain in that video below. But my point is, both of these assume that you're going about it in a valid, a knowledgeable, and rational way. And then, of course, the nice underlying thing, which a lot of people I don't think even realize. So Sue, when she's doing all this, she doesn't even realize that what has she all of a sudden done? Well, she has built multiple streams of income. I think that's how you spell it. I'm sure somebody in the comment section will correct me if that's not right. So thank you in advance. But what has Sue done? Well, now all of a sudden, she has extended her streams of income. She has the job, she has investing, and then she has trading, and I'm putting a question mark by that because that one, again, is the high risk. So that doesn't mean that that's for sure going to become an income source, but at least she's trying. At least she's taking on some risk, but she's also not putting all her eggs in one basket by going all into trading. She's still putting herself into a situation where, like I said, when done right, that's still going to provide some income too. So how do I think you can get rich in the stock market? What is my strategy? Diversify. Don't go all in either way. If you have an interest for trading, if you want to learn more about trading, if you want to do that, then definitely get involved. Just remember, it takes money to make money. So ticker symbol JOB, you're going to want to start there. And then from there, begin to diversify your funds. So do you do something like this? I'm curious in the comment section. Maybe you don't do 50%. Let me know your split. Maybe some people are saying, no, I do 70% one way, 30% the other. So I'm curious if you do something similar to this. Let me know in the comment section. What sort of percentage splits do you use? I'm not saying that it's got to be 50-50, but I would say that's a good starting place to base things off of, and then you can build from that point. But like I said, let me know in the comment section, or if you just have any questions in general. If you enjoyed the video, please hit that like button. Also check out the channel, lots of other types of videos, and hopefully you decide to become a subscriber because I'd love to have you as a subscriber to the channel. So if you check stuff out and you like what you see, please hit that subscribe button. But again, if you're short on time, you don't have time to leave a comment, just hit that like button. Thanks for hanging out. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.